What's going on in the Highlands Ranch real estate market? Hey, it's Sean Reddy, Keller Williams Reddy Group. Each and every month we bring you the Highlands Ranch market in a minute. And this month, being that the calendar just rolled over to 2026, Happy New Year, we're looking at this from a year-over-year perspective. So we'll look at the changes year over year in 9 key vital signs of the real estate market. And then we'll take a look at a longer term perspective, about 3.5 years worth of plotted out data, so you can see how the trend lines look from that regard. So the whole point here, if you are in the market as a buyer or a seller, or maybe you're doing both at the same time, or plan on entering the market in 2026, then you can use this data to your advantage. We'll tell you exactly how to do that at the end here. So before we get started, color coding. If one of these 9 key metrics moved in favor of sellers, it is coded in green. If it moved in favor of buyers, it is coded in red. So we'll start with the glaring biggest movers here, and that's market time, average and median days on market. Both up significantly year over year. If you were in the market, especially as a seller last year, you probably felt that. The median market time went up 73%. That percentage looks huge. Really, it's 8 days. I mean, number of days isn't massive, but by percentage, it is. Same with the average, went up 41% year over year. So homes taking longer to sell, not surprising to most. New listings jumped up 12% year over year. So I guess we're kind of ditching that lock-in effect that the market felt for many years. Excuse me. And lastly, with the buyer favoring movements, the median price actually fell year over year almost by 1%, down to 703 and some change, 703.5. Now we're looking at this and seeing that the average price went up, but the median price went down. I'll get back to that here in a second. Lastly, on the buyer favoring metrics is the median sold price to list price ratio, which measures, of course, median sold price to the last asking price, the median last asking price, not to the original one, because sometimes price adjustments happen. Down 1.4% year over year. Still over 100%, so still lots of leverage out there for sellers, but it is trending downwards nonetheless. Now, on the green side, the metrics that moved in favor of sellers. The average price went up nearly 1%, but Sean, the median price went down. Yeah, typically that means that there were some larger sales that impact the average without impacting the median. But the whole point here is over the course of the last 100 years, big time horizon, the average appreciation, property values went up 4% year over year on average. So when you see an increase even at 0.8% and even a decrease, it's not hedging inflation, we'll put it that way. So it's definitely more of a price stagnant market. Alarms aren't sounding for, free falling prices, nor are confetti cannons going off for huge equity gains year over year. Closed sales up 7.8%. Now we saw a 12% more listings, so naturally we're going to see more sales happen because of that. Purchase contracts up 8.1%. So more listings, more contracts, more sales at roughly the same prices, taking longer to do so. Now let's look at this on a longer term historical graph here. And we're going to start with market times first. So average and median days on market. By the way, this goes all the way back to August of 2022. So about 3.5 years. Specifically starting there because that's when the market started changing due to changing monetary policies and rising interest rates. So you can see the ebbs and flows going with seasonality on market times, with the peaks kind of stretching out this year more so than any other year on this record at least. So we'll see how that shakes out. Usually those market times start plummeting in January, February. I don't see anything that would cause something different than that, so be ready for faster moving homes in the next couple of months. This one, available homes in the red, new listings in the blue, new contracts in the yellow. Why are these all on one? Well, rising inventory has been newsworthy for the last couple of years. And Highlands Ranch is no different. You can see in 2024, we started seeing inventory numbers that had been in double digits on average for a long time start to rise to 100, 150, 200 plus, 232 peaking out. And then you get to 2025 and that scale stretches up to 300 homes available, in July timeframe. If you're a buyer, you weren't hurting for options to go purchase. Let's put it that way. But the bigger the gap between the red, the available inventory, and the yellow, the purchase contracts, if you're a seller sitting out there, it feels slower and slower and slower, the wider that gap is. Well, now we got a gap of, as of January 1st, there were 135 homes on the market, and last month 60 homes went under contract. So that gap has tightened. So you're seeing more competitive environments and even some multiple offer situations out there. So certainly something to continue to watch, but like in previous years, you can expect inventory to go up as well as listings and contracts to go up as we get into quarter one this year. Closed sales, ebbs and flows, bounces between 50 and 150. I know that's a big range, but saw a jump from 72 to 92 last month, and we'll continue to probably see the same kind of peaks and valleys in the same cycle. Average and median price. Now, average price in Highlands Ranch, because we're only measuring 100, 150 closings max, there's going to be some bounces. And last year there was a month of an average price of 862. That's going to influence that average price gain that we saw in the year over year. Median's going to hold pretty steady. You can see some pops here and there, but generally speaking, falling between, we'll call it 650 and 700. We'll continue to monitor that and report out on that as we do our month over month segments. Lastly, median sold price to list price ratio. Not much to talk about here. Again, the overall for the year did crest over 100%, even though there are multiple months under that. If there's anything that starts standing out, like for example, in spring into summer of 2024, there were multiple months over 102%. So homes were going out there and selling for more than asking price, even in 2024. Didn't see as much of that in 2025. However, when we're starting with an inventory level as low as we are right now, at the current demand, and oh, by the way, interest rates touching below 6 again, then that might change very quickly. So be ready for that. So there you have the 9 key metrics, both year over year view and then plotted out. As far as how to put this data to work for you, if you are either in the market now or you plan on entering the market in 2026 as a buyer, as a seller, or you're doing both at the same time to change homes, you want to make sure you are aligned with a professional or a team of professionals really who understand this data and can help you put it into play for your real estate goals. And that looks different depending on what you're doing, what you're looking to accomplish. So make sure to align with that person or that team. If you don't have that person, we would love to be a resource for you. Make sure to drop a comment or find us on social media. Again, Sean Reddy, Keller Williams Reddy Group. Thanks so much for watching. Happy New Year. We'll see you next month.